everyone, and welcome back to Talks with Todd the Lender. Once again, I'm joined by Todd Fitton of Vero Mortgage. So Todd, take it away. What's been going on? Let's talk about, what we're experiencing in this market.
Yeah, so since our last conversation, the market's been pretty flat for the most part. We were expecting mid-month, so about a week ago, we were expecting to have some pretty negative inflation numbers come through. All in all, they actually were pretty negative for the most part.
Yeah.
But it just happened to be the same day that the Johnson & Johnson vaccine news came through, which overpowered the negatives on the inflation. So it actually rebounded our market and has actually sent our interest rates lower over the last week. So that's been positive, I guess, positive on some negative. We don't ever like to see any of these vaccines struggle as we all try to get out of our homes and get back to a normal way of life. But it did change that. With that said, looking ahead, we are expecting the numbers for inflation to be even worse in the middle of May. So barring anything crazy happening that would somehow cancel that out, we are going to start to see interest rates go up over the next 60 days. That because June, again, the June inflation numbers are expected to also creep higher and ultimately put us on a trajectory upward for our interest rates going forward. I don't expect it to be crazy like we've been discussing over the last couple of months. I don't think interest rates in the low fours is terrible. I mean, those are rates that we had just over a year and a half ago. That was all day. They were great rates. So those are still good rates. Those are still extremely viable in today's market. And anybody that's on the fence, though, definitely get out there and get in the market and see if you can find a house to buy.
Definitely. No, I agree. So what would you say are the biggest factors that influence our mortgage rates?
Right now, it's 100% inflation. Inflation drives our rates. Oil is another big one that's been plus and minus for us. We are going to see oil prices creep up. We're already seeing it because they're driving our production down, which will increase, lowers the supply, which with the higher same demand going into summer is going to increase the cost of oil. We're already seeing it since the election. So it's all of these things are going to affect what we can expect to see, but I don't foresee it really being too terrible. It's going to go up. So I just want everybody to be prepared. What I'm seeing, the biggest issue right now, the largest amount of our inventory is going to be new construction, obviously. That should probably continue to be the case. And with new construction, you're looking at, because we're also being held up in new construction because of supplies, as far as lumber and granite and all the fixtures and everything. COVID shut a lot of those factories down. They're getting back up and running. The cost of the materials is much higher now. So all of those things impact the length of time a builder takes to build a home. So these extended escrows that we would normally see a 3 to 4 month time frame on a new build, now we're going to be seeing 5 to 8 months or 5 to 6 months. And that longer period leaves a lot of time for something to go wrong with somebody's loan as far as the pre-approval goes. So what I would encourage anybody that's listening that has an escrow with a new construction is make sure you're staying up to date with your loan officer. Make sure you're getting them up to date information, because if you go, if you're in a 6-month contract on a new build and month 4 you lose your job, or your car breaks down and you have to make a drastic change, or whatever happens, something happens and it changes your financial situation, you've got to make sure that the loan officer is aware of that so that they can pivot and make changes to your file to keep it approved. The other thing is to stay close is on the interest rates. We can't lock loans for 6 months. So as you're getting closer to your completion date, we've got to watch those interest rates, because if you're right on that debt to income ratio borderline, an increase in interest rate of 0.5% could kill your deal. So we have to really make sure that we're staying on top of that and we're planning ahead, again, just so that we can pivot. Because if we see an increase in interest rate of 0.5%, you're talking $100 a month. So we got to figure out where we can remove $100 a month in payment in order to adjust that, or adjust the product that we're using, or whatever the case might be. There's a lot of situations where the loan officers, depending on who you're working with, have some flexibility to make some changes. You just have to make sure that they are able to do that for you in an appropriate amount of time, so that builder can keep on track with your file.
Wow, that's really good information. That does come up, I think, a lot more now, like you said, with the delays in the build. So I think that's really relevant to what we're seeing right now in our market. And speaking of which, what home builders does Vero Mortgage specifically partner with in Tulare and Kings County, where they can be qualified, a buyer can be qualified with you and purchase one of those builders? So who are the ones that you guys partner with?
So there's two companies that we partner with that I would say we have the strongest relationship with, where we're actually considered their preferred lender. One is San Joaquin Valley Home. They're one of the larger builders in the Central Valley. They've got the most product out there, and we've been a preferred lender with them for several years. DR Horton is one, I think, over the last year and a half, maybe 2 years, that they've come to know us as one of their preferred lenders. They have their own lender also in-house, but they're spread so thin because they're such a big company. They only have so many loan officers. So they did bring us in as a second option, which we actually have more loan officers available to them than they have within their own financing entity. So
Wow.
They don't ever really question our approvals. That's the other great thing, is even with some of the other builders, if we can compete, obviously, to make it a better situation for you on your finances, meaning product available, or a lot of these builders are not offering any kind of incentives to stay with their lenders. So as long as we can compete on the interest rate, a lot of times it's not gonna really matter who you stay with. And those builders, with a company like us, where we have such a great reputation within our community, a lot of the builders and the sales managers at these different communities, they don't balk too much at utilizing us, because we are so well known. Country Club Mortgage as the mothership, and Vero Mortgage as a subsidiary of Country Club. We are the #1 lender in Tulare County by almost double. So we carry the largest market share. We have the best reputation. We have in-house underwriting and processing and funding and doc drawing, and everything is all done right here local. So a lot of the sales reps at these builders, they like working with us because they know they can get answers right now. They don't have to wait until business hours. They can get things done with a lot more flexibility with us.
Absolutely. Yeah. That's a benefit for new construction and, just purchasing in general. We talk about that all the time with local lending, especially Vero, how strong you guys are in our market and how awesome you are with customer service and reliability, and how well you guys do beating other mortgage rates of other, lenders as well. So definitely a benefit, new construction or existing, to work with Vero. So I really appreciate that. Well, thanks for jumping on with me today. I'm glad we covered a little bit about rates, and new construction obviously is a really relevant topic in our market right now. So I'm glad we were able to touch on that. Do you have any final thoughts for maybe what we might be seeing in the coming weeks?
I would say one of the things I'm starting to hear is, because of the concerns with interest rates going up, we're starting to hear that chatter about the bubble bursting again. That is something that's coming up. But what I want to make everybody aware of when it comes to the actual terminology of a bubble burst, like what we saw back in 2006, 2007, and 2008, was you have to take a direct correlation with the inventory. So what I mean is how many homes are for sale. There is no bubble to burst with no inventory. So for example, we're anywhere from 290 to 390 homes on the market at any given time. That is less than 1 month's inventory right now. Back when the bubble burst, there was almost 2,000 homes available. Everybody was selling, everybody was buying. Whereas right now, everybody wants to buy, nobody wants to sell.
Right.
You literally cannot have a bubble burst without inventory. So not to say there isn't some other characteristic out there, you can put a name to it however you want, that's going to affect things. But for the sake of arguments, with a bubble burst, meaning that the market just crashes overnight, that can't happen. Supply and demand will always rule the day in any economic, fundamentals that we're seeing. We have low supply, we have high demand. That is what is driving prices. It is not fictitious guidelines that anybody that can fog a mirror can buy a house. None of that stuff is what is driving our market, which is why everybody was wanting to sell their home last time, because I can sell my home for $400,000 that I bought for $230,000, and I can go out and buy a $750,000 home, and hell, I can't even afford it, but I can afford it right now.
Sure.
That's everybody's mindset was different back then. Right now, we don't see option arms. Variable rates is literally a thing of the past. We're seeing a little bit of interest only loan business, but that's typically with your self-employed borrowers that they have a reason for doing it. So we're fixed rate loans, low interest rates, no inventory, and tons of first-time home buyers coming into the market, which is the largest majority of our demand. So the worst case scenario is a lot of those first-time home buyers, they just won't be able to buy because they may not be able to afford what is on the market. But Victoria, I know you see it as much as I do. People are coming out of the woodwork with money. Like, people are flush with cash right now for whatever reason. I don't know where they were a year ago, but people have cash to put down on these homes and make these crazy offers on houses that are $20,000 over what the list price is. That is not the signs of a bubble bursting. That is not anywhere near what we are dealing with right now.
Right. And I'm so glad that you brought that up, because the perspective from people like us in the industry who see day in and day out, like boots on the ground, really know what's going on. The average consumer, the average client, they're not in this world. They're not understanding how things react to other things and what causes certain, like you said, the bubble, what really causes the bubble. So I'm really, really grateful that you brought that up. And it's a really great topic to just end on that good note, because it's true. The supply and demand is crazy right now. The demand is so high, supply is so low. For us to have this bubble that bursts, there's nothing to burst. It's impossible for that, essentially the equation, it doesn't make sense. So you're absolutely right. And people are coming out of the woodwork with cash. I have a lot of buyers that are able to beat out competition with cash out of pocket, money over appraised value, whatever the case may be. And so that right now is what's winning in these bidding wars. And you're right. It's a very unique situation that we haven't really seen before.
Yeah, it is different. And I think there's a couple of unique things that we're looking at. I mean, we've got one sector of people that are retirement age. They're retiring out, and they're utilizing some of the money that they have to help their children that are in that 25 to 35 range to purchase these homes.
Right.
Because they want them out of their garage or whatever the situation might be.
Yeah. They want to set them up with a good interest rate.
Correct. Yeah. There's the group that is super financially savvy, and they've taken care of their money, and they're helping their kids that maybe are a little late to the game or whatever it might be. And we've seen that coming for the last couple of years. We knew that these last couple of years were going to be very crucial for that 30-year-old age range, because they, the millennials, if you will, they didn't really have that nudge, probably a lot to do with the bubble bursting and being a part of that and seeing that they were scared. They had a lot of fear.
Yeah.
Now they're getting into it. Their parents are helping them. Their grandparents are helping them. And so we're seeing a lot of money come to the table. Plus, we've got the COVID relief checks that came in. We've got tax refunds coming due right now. So there is a lot of factors that are playing into this. So as long as we can get these individuals pre-approved and get them shopping now, the biggest investment right now is not cryptocurrency. It is real estate. You will see
Yeah.
much larger percentage gain in real estate than you will in any other investment right now.
Yeah. Absolutely. I agree 100%. Thank you so much for putting that in perspective and making it digestible for everyone that, like I said, is not in our world, that needs to know this information. And that's really what we're here for, to educate, to help, and to get people on the path to home ownership. So thank you so much, Todd. Once again, everyone, Todd Fitton of Vero Mortgage, Talks with Todd the Lender, another episode in the book. So thank you so much, Todd. I appreciate you. As new information comes down the pipeline, we'll be bringing it to you guys as our audience. And of course, if you need anything, please contact myself, Victoria Hansen, or Todd Fitton. Thank you, Todd. I really appreciate your time, and I'll talk to you again soon.
Thanks for having me anytime.